Oops. Wow, just talking a bunch and yeah, I was muted. Good morning, everybody. How are we all doing? 63K the new 510? No. I was saying Lenixus is definitely about 3/4 of the way through an 8-ball this weekend. Talking to Wolves. I don't know what his deal is. But that's some of the funniest shit that I've read in quite some time. Hope you got some rest. No. No, none of that. I'm still holding 1 July, 2 August calls. Got any hopium for this week? Maybe. I don't have a lot. I don't like the way most things look. So before we dive too deep into this, I want to address some things that I've been accused of over the weekend. Uh the first being that the sale of GameStop on Friday was just me. Um I don't have that many options. I wish I did. If I did, I wouldn't fucking be here doing this. Um at all. No sleep till Brooklyn. No problem, Bob P. Did you say that last week's institutions sold off 7, 8, and 9 far dated calls for BBBY? They sold off some of them. And then they bought a shitload more, and then they bought a bunch at $6. So I thought they were gonna roll them forward, and they didn't. They just sold off, and then they bought more on the same day. It's like they started panic selling, and then they got it under control and bought back in. 80 covered calls safe next week. Absolutely not. It's a cat and mouse game. I mean, yes, it is. Although, I'm not sure if this is something that they use to get out of it just this time, or just an advantageous situation plus something that they've used before. And that's kind of what I've spent most of the weekend trying to determine through these FINRA deferments and Rule 15C3-3. Is it just me, or does BBBY look like it's in an uptrend on the 30-minute? I mean, they all kind of look like they're in an uptrend on the 30-minute. Didn't everything kind of bounce a little bit into close? Ah, not really. I mean, I guess sort of. This looks like a reversal. What about $85 covered calls? No, I don't think so. You have dings on your computer, have the audio files archived. Thanks, Gerald. Do you not think that the current situation is a little bit similar to Fab when they crushed the price one day before covering? Yeah, I do. I think there's a similarity to Feb. I don't know if that's the similarity that I see to February. But for anybody wondering, he's talking about this. If we go down to like the 1 hour, I think you can see it a little better. Ooh, crap. I think that was there. Maybe not though. It's May. So if we look at February, right before what we assume was February's OPEX covering, there was a massive downtick in price. This was the war in Ukraine. I don't think that this and what we saw on Friday are the same thing. Also, this was mostly just us being carried back with the market. The volume for that day was quite low, actually. I think it's not giving me volume. Where's volume? The end price? Yeah, I think volume that day was only 1.43 million on the bounce back. So it was like a lot of active fund pressure, but not a lot of covering, right? Like we still never saw OPEX volume occur during the Feb holiday window. And currently, I think, because we didn't see that volume occur until March. Now they had a very good excuse, obviously, in Feb for a solid deferral, right? There was a war, right? That's a pretty fucking good one. I don't know if that's admissible for, or well, I don't know if they can present a case for that given that it's a foreign war. But acts of war, there are provisions for. But I don't even think they need to go that far to get an approval. What's up, Mr. Poopy Pants? Say my name, make me feel special. No problem, man. Thanks, Mr. Poopy Pants. Do you think that the current situation is a little bit... So yeah, Ryan. So I do think it's similar to Feb, but I don't think it's the same as Feb. I was trying to acknowledge your poise and composure on Friday. Really? I felt like I was pretty pissed on Friday. Fucking impressed beyond grateful. Thanks, Dominic. I appreciate that, man. No problem, Ryan. Bathcat, welcome to Dillionaire. I noticed DDS latest 10Q. They still have a 75 million share, $75 million share buyback left. I believe you mentioned 7 out of the 9.24 million shares are DRS. Is that correct? So they're not DRS. They're owned by employees. So they're not like locked up like an insider share would be because employees can sell. But they are closely held. So they're not part of the tradable shares available at market. But yes, that is correct. It's roughly 7 million of the available float is DRS, essentially. They could probably make the act of God argument if the war one didn't qualify anyway. Actually, I've been looking through it and they're pretty strict. Their best two are security purchased and yet to be delivered, and security held at a foreign brokerage, which I think is the most compelling. Given the CVVWAP changes. I mean, we've been tracking CVVWAP for like a year, right? And nothing really explains the weird arbitrage spikes that happen right before OPEX happens, right? But we almost always get them, right? We almost always hit that signal line when OPEX gets off the ground. And I think it's possible that they're holding funds at a foreign brokerage through the transfer process in order to get the deferral. Maybe that's why we saw those Brazilian puts. Yeah, I think if we don't see anything happen Monday, it's very likely we're going to be shorted down this week. But Turd, I know Turd was backtracing previous increases in XRT's shares outstanding. And near OPEX runs, it looks like there's about a 3 to 4 day window before before those shares are like bought and realized. My only problem with this is that I don't think that this is going to be an OPEX window. And there's times where shares outstanding on XRT increase, and that doesn't necessarily lead directly to an increase in the price of GameStop. I think it's only available during holiday weeks. But every quarter there's a holiday. I'm going to be honest, I don't expect a run on Monday. I see a situation where it's at least sort of likely that they have full shorting potential right now via XRT, up until XRT is thresholded or threshold, which won't occur until the morning of July 8th. So I think it's very unlikely that we see a run up. I'm ready for it. It's not like I'm loading up on puts or selling covered calls. I'm ready for something to happen, but I think it's unlikely. Well, digging yesterday morning, I saw that piece in the ETF doc Dunks posted said a foreign asset was held in an ETF that could go past 4 p.m. trading time. Is that what you mean? Sort of. I mean that they're depositing cash through a foreign bank, which so when they cash settle, they're doing it through a foreign bank in order to allow the ETF managers or custodians to file a claim for a deferral because the US banks are closed on the bank holiday, right? When settlement is due. And so they can begin the transfer through a foreign entity. I don't know if they can make the case for July given that there's no holiday. If they pushed July 14 days, then we would run on a not OPEX cycle, which is still not if it wasn't OPEX. Yeah, I think the next expected run up would be mid to late July. I expect some weird shit to happen on July 7th in aftermarket due to the thresholding of XRT, very similar to January 6th. I think 100% of sentiment on BBBY is that we were dipping after earnings on Wednesday. Does this mean it's going to be a moon similar to GME after their earnings earlier this year? Maybe. I think more similar to GameStop's earnings in December, right? People a lot of people sold in December 2020 after GameStop's earnings. I think it was back here on December 8th. Earnings were just shit. And people started selling out right before the big run. Am I cutting out? Really? That's weird. What made you change your mind about selling covered calls? At one point Friday, you said the price didn't improve that day. You'd be selling CCs. The price did improve into the end of the day. That's what changed my mind. Because if the move Friday was simply to burn weeklies, it was very effective, right? We know starting starting last Friday, gamma exposure for market makers increased quite a bit, right? We moved all the way up into Monday morning. They were carrying about 250 million in gamma exposure here. They shaved a little bit off on Wednesday. They added a little back on Thursday. Friday morning, it looked like they were going to start covering it along with the market action. And then they started shorting it. And, you know, I know a lot of people gave me shit for saying fucking weeklies. But when I'm watching weeklies sell off the chain in mass, and our IV just plummet because the entire chain was supported by them. I think my sentiment of fucking weeklies was valid. It's it's not that it's not even that they're bad, it's that the market maker doesn't give a shit about hedging them, right? We've seen it a million times where people pile into zero DTEs and the market maker just burns everything out at max pain, right? If far dated calls, they carry way more risk, so they're far more likely to hedge them. But if they know that they can short it, you know, a few 100,000 shares, and that's going to get, you know, and say it's trading at 136, and there's 5,000 open zero DTEs at 135, right? And they know that a price drop, you know, of $1 or $2 is going to collect them all of this premium, they're absolutely going to go after it, right? But if these 135s are farther dated, if they're, you know, even 617 or August or October, the odds of them being sold are far lower. Especially because they can see how many of those were even bought the same day. So basically they carried that 260 million dollars of gamma exposure throughout the entire week, and then on Friday they spent about $100 million to clear it all out, and then probably made back that money in premium from calls sold at a loss. From a strategy perspective, I mean, you gotta respect it, but that was the worst manipulation I've seen on GameStop since fucking what, last year, November 3rd, maybe January 6th. I don't think I have mic issues. Let me check the connections. I hope that improves it. I have no idea. Refresh worked. Oh, okay. They burned the whole chain, not just weeklies. Well, they burned a lot of it, yeah. But you'd be surprised how much held on. Um, we lost a lot of weeklies, but you know, if you look at the put call ratio for GME, hold on, let me pull it up. If you look at the put call ratio for the day, um, we actually ended up. That's not it. We actually ended up carrying more calls into the end of the day than we started the day with. Put call ratio Thursday close was 0.45. Friday close 0.31. So a lot of them held on. And then a lot more were bought on the low IV. Really? Manipulation, I'm shocked. I mean, fighting against the big boys, right? You saying crime? No. I'm gonna do what's called a pro financial move. And we did bounce off our low trend. So we held support, even though that price drop was a bitch. Okay, thanks, Jean-Claude. So it's good. All right. Are we aware of all or a majority of the equities in the basket? Do we know if or how often the basket changes? The basket changes all the time. Anytime their like NAV kind of bleeds over and they have to go out and buy some new shit. Um, like Carvana, I think XRT bought not that long ago. Um, there was some other crap. They just go out and buy some crap when they have excess money. Also, you know, the reconstitutions can affect the ETF basket pretty drastically. AMC, now part of the Russell 1000, right? It didn't make the cut last year, but this year it did. I'm still not over my puts I bought at open. We're up $100 despite the stock dropping $15 in price because the IV crush leading into the drop. I assume that you were still out of the money at the bottom of the drop, Renzer? Because there's no way the IV could have crushed harder than the delta increased if they were in the money, right? Weren't you at right at in the money? Like $1 or so in the money at the like the middle of the day or something? I feel like I remember you bringing it up on stream. Has there been another time where Ivy was crushed that violently? November? Freg's Day, November 24th. Which is what we were afraid of all week, right? At least I was. Are you bullish on Cat because of 720 dividend record date? No, I'm just bullish on Cat because it's gonna hit its low support. Or it hit its low support. And the market's kind of turning around. Cat's wildly undervalued at $180. So you know, I've been playing the same fucking trend on Caterpillar for like 8 months now. How shit are my August and October calls at 135, 200, various ranges if we're not running till July? I might pull back August. You could carry October probably if you wanted to. Although, you know, if we don't run this week and they start driving the price down even harder, um, you may just want to cut everything back and then get your exposure again later. I mean, that's kind of in the position I'm in, is like, I'm not doing anything until I can confirm that nothing's going to happen this coming week, right? No problem, Husky, not fat. Will 4th of July add to their deferments? So I don't think so. There's no big settlement on the week of 4th of July, right? We had a holiday in April, but that didn't stop May OPEX, right? It may have in fact increased it. If we're correct, and they are compounding these OPEX obligations into the quarterly space, right? If Feb was compounded into March and April was compounded into May and June's about to be compounded into July, right? Then they're using those holiday deferrals in the offset month. So April OPEX was on the 14th. The 15th was Good Friday, right? February, there was Washington's birthday on the 21st. Yeah, 21st. And then June was Juneteenth, which was realized on the 20th, right? And you know, these runs occurring exactly 28 plus 2 days after the previous month's OPEX close, and being so strong, right? Like April, and this is what attracts me to the idea so much, is that May shouldn't have been really anything, right? It should have been March, then April, May, dead, June, right? In order to fit with the previous pattern. Because, you know, it looked, for all intents and purposes, like they, and based on XRT holdings, that they had moved, you know, Jan, Feb into March, and they had moved, you know, then we were going to start running on MJSD, right? But instead we've run on like M. So it's like we're still on F-man, right? But they're using these holidays to offset additional runs. So instead, I think otherwise we would have just run in Feb, we would have run in March, we would have run in April, we would have run in May, and we would have run in June, because of the way they're compounding the obligations in XRT. And they're building up so much not even every quarter, but every month, right? And that's what I was writing about in that DD, how we're starting to see this like shift to this like monthly obligation cycle. And I think these holidays allow them to skip one, right? December, they had Christmas. And I think a lot of that also ties into XRT being on and off reg show. XRT on reg show is under a different audit process than XRT is off reg show. And the SEC's audit process for ETFs on reg show threshold is not as diligent as standards. So they no longer have to report to FINRA or Standard & Poor when they're on threshold. They only have to report to the SEC, and the SEC's audit is archaic and doesn't force the reporting of the naked share creation. Right? So if they can cycle XRT, they get this window that they can short like fucking crazy, And then they don't have to report those shorts to standard. They just have to report them to the SEC, and SEC doesn't give a shit. What's the sentiment of the new meme report? Did it say anything of note? I don't think it said too much that we weren't aware of already. Um, I haven't read it in its entirety because I've been wrapped up in reading all these regulations and DTCC notices and OCC notices for the last like 48 hours. But I have skimmed through it, and it doesn't appear that there's a lot there that we weren't already aware of. Like, we already knew that they could just be like, no margin call. They weren't going to let MOASS happen, essentially, and we knew that, right? That's not anything outside of, like, I think maybe there are other GameStop communities that were unaware of that, but I think we were pretty much expected that, right? No run in July would confirm a breakdown in the cycles. Yeah, I think so. The 28 plus 2, 28 calendar days and 2 trading days following OPEX. Yes. They still get their standard settlement time. They just get an additional 28 calendar days before that settlement is due. That theory seems to hold. Why is the SEC on an archaic system, though? Um, I don't know. And you know what's even weirder is if you guys remember that paper I read, Koala Hugger, way back when. Let me see if I can pull it up because I screenshot it here. He brings it up, and so he wrote a second commentary, which I found over the weekend, to his original response to the SEC. And he notes in the paper that right here, this this is XRT shorting while on reg show during this period from 2015 to 2016. Right? And he notes here that this data is not included in the SEC's audit process. He asks why, and the SEC offers no response, nor have they changed their audit process for ETFs since this response was written to them. But essentially, when XRT is added to Reg Show, right? I have some more here too that I can. The turnover ratio of naked shorts increases versus what should be happening, which is no shorts should be being sold out of the fund, right? It shouldn't be allowed to be used to short at all. And what we're seeing is we're seeing an increase of shares sold short when XRT is thresholded. And they were doing this shit back in, 2015, 2016, 2013. The SEC has been well aware and known about it for quite some time. And he says, and I quote, this is a large amount of transactional value in a security that essentially has no shares available to trade and is a regulation show issue. Virtually nothing in the trading of XRT changed after the Reg Show designation. This is not the apparent purpose of Reg Show and its amendments, i.e. to have no effect on securities that are being abusively sold short. certain ETFs, including XRT, do not appear to be benefiting regular and long-term investors or the ETF's underlying securities capital formation processes, but rather are benefiting short sale transactional activity for a few to the detriment of other market participants and perhaps ultimately the US economy and taxpayers. I mean, this guy's not wrong in the, amount of risk carried in these ETFs. And then, fucking Friday, right? 4,600 puts, a 4,600 contract put spread placed on XRT. GameStop immediately tanked. I'm getting interested in options positions that can capture VWAPs but aren't dependent on timing. I mean, I would argue, especially with such as the Jan 950s, I would argue that with the Jan 950s, that they are very dependent on timing. They're not dependent on the holding period, but the exiting of those like volatility positions can be quite difficult. Hey Shill, what exact price to the set will we be at tomorrow and Friday so I can YOLO into weeklies and blame you for my own stupidity? I mean, weeklies were great Friday morning. I bought them, I sold them, they were profitable. It's just relative, right? And if the strength in the chain is entirely reliant on weeklies, then we're just pumping and dumping ourselves. Did you see the screenshot I posted in 510 regarding 3 additional circumstances other than weekends and holidays, but it's at their discretion? I did not. Can you DM that to me, Bob? Bob? That's the proper pronunciation, right? Just need a few more 510s. I don't know if that's the answer, Pickle Morty, but I appreciate it. So if they have some weird after hours stuff happening July 7th, I'm assuming the logical move for them would be to crush price this week in Jan from 160 to 120. Also, this is really fucked up. I agree. Look up Dr. DaCosta. Okay. It's so funny that the regulation that was put into place to stop abusive shorting is used to short even harder. Yeah. So I guess the only conclusion to draw is that SEC is complicit and probably getting a cut. I think the SEC doesn't give a fuck as long as the ETF retains its NAV because they want it there to provide liquidity. So essentially, it fulfills their requirement to the market in its existence. It provides liquidity and reduces volatility, and it maintains its net asset value, and that's all they care about. If it is functioning within those parameters, they do not care about the, broader reaching effects. So 28 calendar days past the 24th is July 15th. What? No. 28 calendar days after the 17th is July 15th. They'd be due on the 15th, but they'd still have 2 additional trading days to settle, right? Same as OPEX. It just essentially pushes a middle OPEX into the next one. Maybe this is something we didn't see last year, A, because ETFs weren't used as heavily, and B, because holidays fell on a different time frame last year, right? Like last year, we didn't have any OPEX periods that had a holiday. Neither Feb, March, or Feb, May, August, or November. Is today members only? I have it open to the public because I know a lot of people have questions. So if they could just destroy Jimmy with shorting on XRT during Reg Show, why didn't they keep shorting through Friday? The afternoon was relatively calm. Why stop at 132 and let it break back to 135? Probably because they'd settled their GEX. I think they only shorted to kill the GEX. I mean, they did it in range so perfectly, right? Like exactly back to spot. That's, I mean, the price we got shorted to on Friday was the price we broke out from last Friday, right? So they just returned it directly back to spot price right there at 132.50. And then that's all they had to do. Then they didn't need to short anymore. They spent $100 million and got rid of $250 million of gamma exposure. I mentioned it, I feel like a bunch throughout the week that they would have to short us back to, you know, back to that spot price in order to get rid of the gamma exposure. Otherwise it was going to stay there, and that's exactly what they did, right? I'm not worried about the exit. I'll be paying attention when Jamie runs. I mean, then yeah, if you want to carry exposure, but just remember that there, even on those far dated calls, there's still a theta cost. You're still paying to maintain exposure, which some people can afford to do, but others can't. Welcome to Cornishon, whoever became one. Feels like any run on Monday, if it happens, might not be worth chasing, because it will be extremely short-lived. Possible. Although gamma exposure for Friday is up again. So we could have, you know, a T+2 covering that carries anything that happens tomorrow into Tuesday. I mean, if I chase it, I'm going to be chasing it with like in the money calls, probably like something extremely risk averse. Because yeah, I wouldn't trust it to sustain at all. They can watch. I mean, they can't comment each deck. I just want to prepare for a potential split, which if say is 5-1 would become 190 strikes for 500 shares. I mean, you probably don't want to carry split contracts on a separate chain through a split. They become very illiquid very fast. I do not understand why they let it run if they have an entropy swap. Seemed primed and ready. Is it possible the entity with the swap was different than whomever brought us down Friday? You know that February's entropy swap was entered in February. It was entered during the ETF FTD period in Feb. So they entered their entropy swap right around here in Feb. And this time around, they entered their entropy swap right around here. Like that's where we saw those positions being opened up, and they're still in place. If we run in July, it will fall the week ending the 15th or the 22nd. If we run, the run would fall the week ending the 22nd. Someone. So the most advantageous time to enter an entropy swap is when volatility is high, right? So volatility was high at these 2 points, but the price really isn't relative to like where it can go throughout the course of that period of time, right? So they essentially are able to bait long vol positions that want to short the peak here. And that gives them more push up when they have the swap coming in. But we already know that they use these, like, what we thought was just solely an ETF covering period, but this month was a little bit more. They use these periods of time to enter their entropy swaps. If the deferment of obligations by 28 days is true, I'll be so freaking hyped. I have a feeling RC and Elon understand what the opposition is doing and announce stock split div in July OPEX for August record. I know they choose the date of record, but they don't choose the date it goes live on the exchange. So, I mean, I don't think a July announcement though would be recorded in August. It'd probably be sooner. I don't know. It depends on how much pressure they want to apply, right? This is the first year Juneteenth was a federal holiday, but last year Juneteenth was, like ACATS was down, like federal agencies were closed. It was still recognized federally. This is the first year it's a bank holiday. But it's the second year. And this created all kinds of problems last year with FINRA and the SEC being down for the day. They had to write a whole settlement, like, procedural thing for institutions, so because of the sudden closure. Oh, because they only can do that when, so the MM can't just arbitrarily change IV and drop options pricing, right? The IV drop is largely due to the sell-off of the weekly calls, right? They can scale down our IV because those orders are coming in. And they understand their own risk, right? So if they're not going to take on any risk in order to drop that and not hedge the upside IV, they're going to do it, right? They know psychologically what is going to trigger a sell-off of weekly calls. And if the chain is supported by farther dated calls, that's a much bigger risk for them, right? Suddenly that doesn't look so hot. Yeah, sure. No one goes broke getting $80 or 80% Mr. Poopy Pants. You absolutely can. And that's a way of handling them. But like my buddy, I have a buddy who trades like the GME cycles, and he does essentially that. Like that's his plan. He buys 950s, he sets limit sells on them at various points, and then he just lets it sit. If they fill, they fill. If they don't, they don't. He doesn't give a shit. Um, but how do you stack this, and how much do you leave on the table if you're too conservative, right? If you're very conservative and say you're like 1x, 1.5, uh, like 2, 2.5, 3, right? And you scale that out, so like say 40, 10, 15, 15, 10, or something like that, right? Um and the price runs in these 10x, you've left an obscene amount of money on the table. Like, sure, you haven't gone broke, but this runs no different than March in a way, right? In March, people were afraid, they bought far dated calls, they didn't get a lot of leverage, right? And everyone spent this entire period complaining that they didn't buy weeklies. Like, oh, if I'd only bought weeklies, I'd have so much more money, blah, 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 blah. And this time I shouldn't have bought weeklies. I should have bought farther dated calls, and that just alternates back and forth. There's no solution to that. Someone is always gonna miss out. If you're okay with leaving profits on the table and just taking a conservative gain off of these runs, then sure. I don't think a lot of people are here for that, honestly. And that's part of my position, right? Like when I enter my position, that those like 950s are a part of it, but they're not the entirety of it, right? Like I have parts of the position that are far more greedy and looking to capture that extra money on the table. Going forward, I'm thinking of picking up a few 30-day calls the week prior to OPEX. I'll be ready to cut and run at the first sign of trouble. Decent strategy. I mean, that's what I did this week. I bought calls last week on Wednesday, Thursday, and Friday, and then shit looked bad on Friday, so I cut them. I don't think I think we need to every investor needs to figure out if they want exposure to OPEX, how to get that exposure and minimize risk. Because if you can find something that works for you that does both of those things and it does run hard, you can make a lot of money. And if it doesn't, you can cut your losses. And I mean, if you compare what happened Friday to Freg's Day as a whole, I think people killed it. I think most people got out with either small profits or minimal losses compared to people, losing 100% on Freg's Day. I heard you repeatedly saying that they could drop us back to spot and avoid gax. That, with the switch to value, made for a bad night's sleep on Thursday. Had that gut feeling that something was up. Yeah, I mean, a large part of the reason I had stop set was because, I didn't feel comfortable with, especially the low volume price increase in the morning. Like volume wasn't picking up. They weren't covering. And you look at like the S&P and look at every other stock on Friday, and everything just ran hard as fuck, right? Like just hard turnarounds, high volume, not GameStop. Like everything was pushing up and GameStop was just drifting slowly, tracking those active funds, but not seeing the kind of volume it should have been. Saying vague, but all that to say, Juneteenth has nothing to do with the stock. Yeah, Juneteenth specifically has absolutely nothing to do with the stock. A bank holiday is important, but it's not that it's Juneteenth. It's any bank holiday. just got like, ow. Son of a bitch. Sorry. I just like pulled a muscle in my neck. That was right up into the brain. Oh, okay. Week ending the 22nd, unless they cover early on the 15th, like they did in November, right? Yeah. There's always the potential that we see early covering. They return ETF obligations in May. If not, I don't see what they short us with going forward other than in the money puts. I mean, they had to have returned ETF obligations in May, right? Because they got it off Reg Show for 5 consecutive days. They reduced the number of fails on XRT sufficiently for 5 consecutive days to get it off the Reg Show threshold list. And then right back on the threshold list with the futures expiration. Like, that can't be a coincidence. 28C plus 2 from 617 is 719. Yep. Morty Sanchez, thank you so much for becoming a Dillionaire, man. I appreciate it.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gert in the go. Hoping that you read the DD, cause when the shit
Anonymous C-SPAN lover, thank you also for becoming a Dillionaire. Guys, if you want, hop on Discord, go to connections, and then connect your YouTube account, and that'll unlock the private Discord. If not, or you're having problems with it, just DM me, and I'll set you up after the stream. Thank you both so much.
When the Citadel fails, I'm a bomber on both. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no cult.
There's a link in the description, Morty. %20 towards weeklies, unexpected runs with the knowledge I may lose the other 80% further out. 20% towards weeklies, unexpected runs with knowledge I may lose the other 80% further out. I mean, that's one way to divide it up, yeah. Message sent at 24 minutes past the hour. In case you were curious how behind you were. Yeah, I have the timestamps on. I'm about 5 minutes behind. So without in the money puts and assuming no run, do you just expect Jimmy to follow the SPY? Or they short the shit out of it? We never did get that low IV, low price scenario that they love so much. Freg's Day broke my IBKR. I have a negative 99.95% performance on the account. Even when I made more money than I ever lost, I was at 99.93%. I think you can reset it. I'm not sure though. With the Redbox going to close only, does this mean that the powers in charge can stop all squeezes? Hence, Jamie will never squeeze. No, the Redbox thing's more of like someone decided to open up. They snuck through an OCC, approval and opened up an options chain on a stock that should not have had an open options chain. There's more at play there. But I mean, yeah, if they want to stop a squeeze, they absolutely can. I think it's more of a question of who they burn trying to do that. GameStop has a little more protection, right? With these massive institutions owning it, like Vanguard and BlackRock. Because there's going to be pushback if they try to stop a significant amount of price improvement on GameStop. When internal compliance allow knowingly false reason or actively creating a situation to get a special deferment. It's not a false reason if it's true, though, right? As your resident physical therapist, I can tell you that chiropractors are FUD and won't help your neck pain. I'm aware. I think the issue is strictly that the bank holiday gives them a deferral. Yes. Did you read C30? Welcome to the non-pores Discord. Did you read the C35 married to borrow on Reddit by... Yes. I wrote a commentary on the DD already. You can... It's in the announcements on the Discord, or you can go look at his DD. I had like 30 people message me about it over the weekend. It's fundamentally wrong and structurally incorrect. Sorry if I missed your analysts. Best cult ever. Thank you, baby Carlos. Sorry for the tardiness. Did you mention your thoughts of Jimmy price target for the week tomorrow morning? Looks like SPY might be moving up for now. I don't know if GameStop's going to run this week. I don't have a lot of confidence in it. I'm not making bets either way. If I see it start to move in a way that looks compelling or is backed by volume, I'll buy some calls, probably in the money. Otherwise, I'm not touching anything. Same goes for the downside with cash covered calls and puts. So what I'm looking for is a break in one direction or the other. But I am not as confident as some others in a move this week. I'm not convinced they returned their GME obligations in XRT. Can you show the chart where they on the chart where they did? I mean, here through May. I'm not saying that they returned them all. I don't think they did, right? Otherwise, we would have seen the borrow rate continue to drop and it stayed static. But we know what happens when XRT gets thresholded and GameStop shares start getting borrowed again, right? Like the utilization of GameStop shares and prime lending pools after XRT begins the threshold process is significant, right? As it was in January. As your resident massage therapist, I recommend getting a massage before visiting the chiropractor to allow for a better adjustment. I'll pass on both of those things, but thank you. Is July 4th going to cause the same extension as Juneteenth? I don't think so, because I only think that those holidays are relevant when they fall on the week of settlement. So I don't think they can make a case for deferment without the holiday falling on the same week. So the OPEX expiration week needs to have a holiday. It appears. As an expert in homeopathy, I recommend everyone drink plenty of water. Thanks, JFresh. I got a question about risk management. Do you enter into an options position with a stop loss already in place? Generally. If so, what percentage do you put on it? Thanks for all the effort that you put in. I mean, it's a variable. It's something that you need to learn on your own. More volatile stocks need wider stops. You have to assess your risk and where you want your risk, and then you have to place your stop at that point. You know, if there's a price where you will no longer want to carry that option, you need to determine what that price is, and that's where your stop should be, right? If the price of the option moves up and you know you've now realized profits, then you want to stop, you know, relative to those profits. How much of those profits are you willing to keep? How much are you willing to sacrifice if the price doesn't continue up, right? So, you know, if your option's up 50%, then you're going to want to capture 25% of those profits. Then you need to determine the premium at which your stop needs to be in order to ensure that no matter what happens, you at least capture 25% profits. Then if this moves up to 75%, right, you can move your stop up relative to the increase in price. Same thing if you just buy into the option. How much are you willing to lose? 20%? Set your stop 20% below your buy-in. Right? It's all relative. And on more volatile stocks, you know, you want, because they trade in a broader range, you want wider stops, right? On something that's very, very stable and consistent, you don't need a very wide stop, right? You can set your stops at just, you know, support levels. Going into SLD, Dominic Joseph, as soon as we start to get some serious economic data coming in, I'm going to be preparing. But I think the current run on the SPY is going to carry out for at least the rest of this week and possibly into the week of the 15th. But I think this week it's going to continue to push up. Can you talk about cat calls? They're going to be in the Pickles picks tonight. I have a write up I did on them. So, is it possible that holidays would be the reason for moving between F-Man and MJSD? That's possible, yes. That's something that I'm investigating. I think so. I don't think we're really on MJSD. It's just the appearance of it because, well, it was the appearance of it, right? But I think these holidays are throwing the cycles off and they're compounding more obligations per month than they were previously. As an expert options purchaser and novice seller, I recommend diamond handing your options until they are the price of weeklies. Then who cares about selling? Lose it all. Thank you for your take, Pickle Morty. Any thoughts on CAR? Really responds to OPEX like GMA. It's very interesting, but it has an extremely illiquid options chain, and its runs are extremely volatile. It's interesting though. I'm aware of Avis. It's not something I'm particularly interested in playing. DDS is far more stable. So unknown price movement early this week, then big downs going into July OPEX. I think just big downs. I don't think it's so much of an unknown, but I'm holding out for the possibility of unknown upside. Do I need to worry about the cat dividend for my calls? No. If anybody's short cat, which I think there's a decent number, then you know we'll probably see them close out positions before the dividend. Usually cat does pretty well on its dividend date, like going into its dividend date. If SPY runs, assuming we track with it, we will just end up around 145ing. Yeah. which may give people still holding another chance. Makes sense. It's now kind of rolling all the cycles together, like you've said before. Thanks for the insight. Well, I mean, it became apparent a couple weeks ago that the game is changing, right? When they started exercising those in the money puts. I'm very curious for the FTD report this week. I think it's going to be extremely telling, and that's going to give us a lot of information that we need to decide what the fuck is going on, right? What's your ideal entry for 950s? It's more of an IV target. I try to target an IV 30 sub 120 on any entries into 950s. So 113, 110, very good. If you can get IV 30 sub 100, the entry on those 950s is phenomenal. What? Derp, did you pay attention to the beginning of the stream? I went over where OPEX quite extensively. What tickers does TA work well with? It works better on more stable stocks. There's some argument that the SPY is too volatile, but I disagree with that. It's just a little different on indexes. Any big blue chips, TA is usually pretty reliable or more reliable. The larger the float, the more liquidity, the more reliable technical analysis tends to be. Do you see BBY following GME over the next couple weeks? Can they short it any lower? They can. They've piled into some $6 puts, which is a little bit concerning. If BBBY also isn't going to run until July, that would make a lot of sense given that all the puts on it are currently for July 15th. So they could be ready to pull the stops at that point. As far as my calls for BBBY go, I haven't decided if I'm going to average down August with us not running here in June or if I'm going to roll it forward. I might roll some of it forward into January and then leave like a little bit on the table just in case, maybe average that down. I get the feeling these holidays seem bad at first because we know what's going on, but maybe they're really pushing them in a corner because they have to compound their obligations. That's possible. You just have to. About 20 minutes in, your audio cuts out. Yeah, I don't know what happened. A few people mentioned it though. So how far out do you look at call on cat? 45 days or even further? 45 days are usually okay. Sometimes I'll buy 60 or 90. Near the bottom of its trend like this, I really like the farther dated ones. They're not very expensive, especially out of the money. And they give you a lot of time to realize the full potential of the move, which can take a few weeks. I wasn't here for the last Entropy swap. How do they handle IV prior to the swap? Since they don't use their current swap, what can we watch out for before they do? I think they want to crush IV hard after they enter an Entropy swap. As hard as they feasibly can before covering. Vendors should just get it over with and make a new rule that lets shorts defer whatever they need to if a YouTuber named Gurkha's subscribers have positions against them. Thoughts on shorts flipping long? I don't think so. It's a possibility. It's in the back of my mind, but I don't think so. And if they did, we would see a run of massive proportion, right? Compared to previous like OPEX periods. Look at AMC, right? On the long flip. Lots on longs flipping shorts. I mean, that could happen this week. Hear me out. Cat slow move up to 230 between now and July 14th. At the same time, GME slow move back down to 80. Then we swap Cat for GME. You can try it. I do find Cat to be pretty reliable in the interim between GameStop runs. Although most recently, I would say they followed similarly. These are in different indexes entirely. But Cat's moves, yeah, I mean, Cat's moves tend to be a little bit inverse GameStop. It's one of the reasons I probably play it so, like, just psychologically, that I play it so heavily in between runs on GameStop. Yeah, I mean, it started moving up before GameStop ever did in Feb and March, and then it kind of its last rally, I want to say it kind of moved with GameStop. DDS. Everyone chant it. And DDS is a fun play too, but it's expensive. It's like very capital intensive, right? You're spending $250 a share, $220 a share for $50 to $70 price improvement. I mean, it's not bad, don't get me wrong. It's just it's a lot of upfront capital to get enough leverage for that to really be like a big play. So as of now, one XRT reg show allows for massive shorting until July 6th, 13 days from when it got on due to looser regs. We think they utilized holiday extension and compounded June into July. That's where my head's at currently. When do we see Girk's head fly around the screen again? I don't know. Do anybody have any more questions? Did I mostly cover everything? So that's what we're looking into. If I can get a DD out, I still want to wait the next couple days to see what happens, to see if, this really was just taking advantage of the holiday and we see a run this week or not. If we don't see a run this week, then I will probably write the DD on this. What is interesting is it does not appear that they can make a case where the security is unable to be purchased due to our average rolling volume. So they cannot get that big extension that's like the one where they can extend 14 days 5 times. It does not appear that they are able to get that based on FINRA's rules. Not that FINRA can't just approve it, but we can't assume crime, right? Because otherwise you can't have a thesis of any worth. All right, see you later, Elena. Have a good night. Thanks, Jade. I appreciate it, dude. Get some fresh air. Appreciate the stream. I have to go take a ferry today because my fucking buddy wants me to come to like some barbecue or some bullshit. I don't like boats. Like, I'm okay with them if they're just sitting in the water, but I don't like moving boats. Take there you are. How low can we go? If we track price action from Fab, maybe down here to like the low support. I think it's a little extreme, but maybe into near the $100 range. But I think we're gonna have a lot of resistance in this band. And this is, I think JFresh is right. Like, I don't think they have a lot of ammo, essentially, to get us through this. So it's very possible, like, 116 is the low. If they really, really pushed and they, you know, are able to short beyond the expectations, then maybe 100. But I highly doubt 100. Like, the probability of falling to 100, I would say, is fairly low. And if it does fall to 100, we all know GameStop free, like... GameStop sub 100, same like free. Why are you lying? We know you're going home to Staten Island. It's not Staten Island. It's like a private ferry out to his like compound, which is on like one of the like little islands off of Long Island. It's gonna take me 2 hours to fucking get over there anyway, at least. I'm not fancy. He's fancy. I can't remember what it's called. I have it in like a text somewhere, and I don't know where my phone is. Heading to Kenny's for a barbecue. Got it. No, not Kenny. Will he host the cotillion on his compound for us? Maybe, actually. He let me throw my birthday party there one time, so that was cool. Later, everyone. Thanks again. Thanks, Satchel. BlackRock employee summer barbecue. Yeah. All right, later, guys. Thank you so much for tuning in, and I will see you bright and early tomorrow morning. Pickles Picks will be up tonight. Probably by midnight. If you're up late, midnight my time, depending on when I get back. If you're not, just check them in the morning. Thank you guys. I appreciate it. And thank you for all the support this week. Really. That means a lot. We don't win them all, but when we win, boy, does it feel good, right? Have a good night, guys.